Hello, good afternoon, investors and corporate. Welcome to SET Digital Roadshow Year-End 2023 Performance Review. This section will run about 45 minutes, including Q&A. Company will start the section by 30 minutes presentation, followed by 15-minute Q&A. And during Q&A, investors may leave your question in meeting room chat box or use raise your hand function. We will open your microphone so you can ask the question to the company directly. So may I now invite Thai Oil Public Company Limited to start the presentation, please. Thank you very much.
Thank you, Ka, and good afternoon, everyone, and welcome to Thai Oil Q4 and full year 2023 conference call arranged by the Stock Exchange of Thailand. And on today's call, we will start with the company presentation with the three key agenda, key company highlight, followed by performance analysis, and closing with market outlook. And after that, we will open the Q&A session. And before we start, let me introduce Thai Oil management and team joining this call today. We have Khun Thawsang Chaiprawat, VP of Financial Planning, Khun Nattapol Naparat Wong, VP of Commercial Planning, and me, Chuliyon Rengrunom, Investor Relations Manager. And now, let me hand over to Khun Thawsang to walk you through our first part, the key company highlight. And Khun Thawsang, please go ahead, Ka.
Hello everyone. For last year in 2023, gross refinery margin normalized from previous year due to higher supply from refinery. Gasoline and gas oil demand have already recovered to pre-COVID level, while jet demand continues to rise following increasing international flights. We expect jet demand to recover back to pre-COVID level this year. In addition, higher demand and tighter supply also caused global gasoline and middle distillate inventory to remain below 5-year average level. On the crude oil side, crude balance remains deficit last year, driven by Saudi production cut, while Israel-Hamas conflict has created concerns on the potential crude supply disruption. As a result, crude prices has been trading at relatively higher range of $80 to $85 per barrel last year, while Mobile OSP softened to $3.2 per barrel from higher U.S. crude supply. At the same time, Singapore gross refinery margin softened to average around $6.8 per barrel in 2023, lower from $10.7 previous year, but still above historical average. From the supporting market factors, Thai Oil reported market GRM in 2023 at $8.5 per barrel, lower year-on-year from softer crack spreads on all products as a result of higher supply but still a relatively strong level. With a $3 decline in crude oil prices, Thai Oil has minor stock loss last year of $0.2 per barrel and reported accounting GRM at $8.3 per barrel. For aromatic and LAB, with stronger PX and benzene margin from higher demand, GIM contribution from these two business sectors in 2023 was higher at $0.9 per barrel compared to $0.4 per barrel in previous year. GIM contribution from base oil declined to $0.7 per barrel from less base oil and B2M supply tightness following higher refinery runs. In summary, Thai Oil reported market GIM at $10 per barrel in 2023 and accounting GIM including stock loss at $9.8 per barrel with a net profit of 19.4 million baht in 2023. On the operation side, Thai Oil continues on our operational excellence actions to capitalize on improved market conditions. In 2023, refinery run rate was back to pre-COVID level at 112% from higher regional demand. Aromatic run rate was at 73% from low aromatic margins, but we re-optimized to produce more gasoline. We continue to run LAB at maximum 123% and ran base oil at optimum level 79% utilization rate. In terms of the production yield, we increased our jet production to 18% from 14% previous year, following higher jet demand in the region. On the crude optimization, we processed 91% of our crude from Middle East as it used the most middle distillates to capture higher jet and gas oil demand, while maximize domestic and Indochina sales at 85% and 12% respectively to capture higher regional demand. On the financial front, we continue to enhance our cost management through Orchestra Plus program and reported low operating costs at $1.9 per barrel last year. With strong financial performance, Thai Oil announced an annual dividend of 3.4 baht per share or a payout ratio of 39%. On the strategy side, we have solid progress on our 3V strategy to transform our business portfolio to become a more sustainable energy and chemical company. For our first strategy, volume maximization, our key mega project, CFP project, progress at the end of last year was at 95%. We have completed all critical module construction, and in February last month already started up the first unit of CFP, which is HDS4 or Hydro Desulfurization Unit number 4 to help produce Euro 5 grade product at a more efficiently. CFP full COD is expected by 2025. For another important investment, our investment in Chandra Asri in Indonesia. Early last year, CAP has acquired electricity and water business to diversify its portfolio and is currently preparing for the upcoming final investment decision expected in 2024 of chlor-alkali and ethylene dichloride project, which is a new high-value product to enhance its ethylene value chain. On the value enhancement strategy, Topnext, our international marketing arm of Thai Oil, continue on market expansion in 3 key target countries, including Vietnam, Indonesia, and India. We have established an office in India to broaden our distribution business and are now exploring new potential partnership in India. And for our last strategy, value diversification, we continue on market study of high value business in disinfectant and surfactant sector, which we see high market growth and strategic fit with our current business. At the same time, we collaborate with PTT Group on the study of new energy, including biojet, green hydrogen, and carbon capture utilization and storage. And last but not least, Thai Oil once again is a Dow Jones Sustainability Index or DJSI member for the 11th consecutive year in the oil and gas refining and marketing industry. We also achieved the highest score for sustainable development from S&P Global Corporate Sustainability Assessment Score in 2023, demonstrating our full and continuous commitment towards ESG. Next, Khun Shin Leon will present on our financial performance last year.
Thank you, Khun Thawsang. Next, I will go through performance analysis, starting with the financial performance in terms of net profit contributions. In Q4, we reported net profit 2.9 billion Thai baht, with the core operating profit 5.2 billion Thai baht, mainly driven by the healthy refining margins. While from the declining crude oil prices, we recognize stock loss, offsetting with the reversal of write-down 3.3 billion Thai baht. And in terms of the contribution by each business unit, we realized 85% from refinery and lube business, while power contribute 10%, and the rest 5% came from petrochemical 3% and other business 2%. And looking at for full year 2023 performance, net profit was 19.4 billion Thai baht, with the strong core operating profit 27 billion Thai baht, and deducted by the other items 7 billion, including the hedging loss and the tax expense. And in terms of the contributions, similar to Q4, majority portion contribute from refinery and lube business, 88%, and petrochemical contribute 2%, and power business contribute 7% and 3% from other business like solvent and ethanol business. And moving on to the refinery business unit, on the top left chart, in terms of refining utilizations. In Q4, we had slightly higher crude intake to 111%, higher Q on Q from 110% in Q3 due to the oil spill incident, which occurred in the early of September. And for full year 2023, we maximized our utilization to 112%, higher year on year, and also higher than the industry average at 93%. And the reason why we're able to proceed above 100% is to support the recovering domestic oil demand. As you can see in the top right chart, last year the total oil demand improved 1.5%, led by jet fuel demand 50% improved year on year, and more gas or gasoline demand improved 4% year on year, while diesel was lower year on year 5.7%, and this declining was mainly from the drop in the diesel demand from the power sector. And in terms of the commercial, Thai Oil, we focus on the sales in domestic and Indochina market. Last year, we captured 86% in local market, while we export 11% to neighboring country to CMB, Cambodia, Laos, and Vietnam, and export to other countries like Singapore and Malaysia only 3%. And if you look in terms of our customer breakdown, the number one customer is still PTTOR, 46%, followed by the domestic customer PTG, 21%, and other major oil like Shell, Chevron, and Bangchak, in total around 8%. And in terms of the margins on the next page, as Khun Thosang mentioned earlier, in Q4, we reported market GRM $7.2 per barrel, normalized Q on Q from $12.4 per barrel in Q4, mainly from softening products margins and higher crude premium. And from the concern over the economic recession resulting in the softening crude oil prices, the Dubai went down to $77 per barrel in December. So we booked stock loss in Q4, $5.1 per barrel. So accounting GRM was lower to $2.1 per barrel. And for full year, Thai Oil, we reported market GRM $8.5 per barrel with marginal stock loss $0.2 per barrel. So in terms of the accounting GRM, it was $8.3 per barrel, normalized from 2022 at $13 per barrel, which driven by the energy crisis that leading the gas to oil switching and skyrocketing gas and diesel price at the time. And moving on to the aromatics and LAB business. From the improving aromatics margin, both paraxylene and benzene, which mainly from the improving downstream demand and limit supply from the maintenance, and the LAB contributions remain at a strong level. So in Q4, we had higher contribution around $1 per barrel, consisting of aromatics 0.5 and LAB contribution another 0.5. And for full years, contribution was higher year on year to $0.9 per barrel, mainly from the recovering demand, mainly from China. And next, for the lube business, in Q4, we had stable contribution, $0.5 per barrel, mainly supported by improving base oil and bitumen spread from the limited supply from the maintenance and the lower feedstock cost, which is the fuel oil. And for full year 2023, lube contribution was softer to $0.7 per barrel, pressured by the increasing supply after the refinery back to normal production last year. And if we combine the contribution from three key business from refinery, aromatics, and lube business in terms of integrated margin in Q4, we reported market GRM $8.6 per barrel, lower Q on Q, and for full year at $10 per barrel. And turning to the cost side on the right-hand side, on the top right chart, it shows refinery cash cost Thai Oil be able to maintain a low and competitive refinery operating cost, $1.6 per barrel, and the interest expense another $0.7 per barrel. And if you include the additional operating costs from aromatics and lube business, so the group cash cost increased to $1.9 per barrel. Marginal cost increased $0.3 per barrel, while the marginal margin that I previously mentioned, GIM, increased around 1.5. That's the fully benefit from the fully integrated refinery like Thai Oil. And moving on to the next business unit, the power business, which contributes stable income to Thai Oil Group. Last year, power sector contribute net profit to the group 1.9 billion Thai baht, consisting of the net profit from our own power plant, top FCP around 1.7 billion Thai baht. It's improved Q on Q, mainly from the higher selling price following the higher natural gas price. And another contribution was from the dividend income from GPSC, another 170 million Thai baht. And our next business unit, the olefin business, after the acquisition of Chandra Asri or CAP, Thai Oil we now hold 15% stake of CAP. And last year, the olefin business contribute net loss $5.7 million, but it's improved year on year, actually mainly from the China reopen last year. And also CAP last year, they diversify the portfolio to sustain the income from utility business. And moving on to other business, solvent and ethanol business. For solvent business, solvent contribute 403 million Thai baht, slower year on year, mainly weakening demand, as well as a softening in ethanol contribution. We realized a net loss 54 million Thai baht from ethanol business, owing to the significant increase in feedstock prices. And next, in terms of the financial statement for the profit and loss, last year we had a lower revenue tracking crude oil prices, as well as slightly lower EBITDA, 35 billion Thai baht, due to lower GIM and stock loss. And in terms of the bottom line, last year we reported 19 million Thai baht, equivalent to earning per share 8.7 baht per share. And in terms of the cash flow, we had beginning cash and short-term investment 43 billion Thai baht last year, and the free cash flow 14 billion Thai baht, derived from operation 28 billion, which mainly from the net income 24 billion Thai baht, offsetting with the cash outflow from CFP capex spending 14 billion Thai baht. In addition, in terms of financial, we had cash outflow from loan and bond repayment, interest and dividend payment, in total around 23 billion Thai baht. And altogether, last year, cash and short-term investment is decreased by 9.5 billion. So we earned 34 billion Thai baht cash and short-term investment last year. And overall asset on the next page is worth 420 billion Thai baht, down 5% year on year, mainly from lower account receivable and inventory, following the lower crude oil prices, while fixed assets were higher year on year from the good progress of our project, the CFP project. As for the debt side, last year we had a bond repayment, so the debt decreased around 9% year on year to 160 billion Thai baht, equivalent to $4.6 billion. And majority of debt is USD currency, 65%, and 35% was Thai baht currency. And for the interest portion between fixed and floating rate was 79 and 21 respectively. And the cost of debt is 4.3% per annum on a gross basis, or 3.9% per annum, netting with the interest income. And in terms of the leverage, last year we able to maintain the net debt per EBITDA 3.6 times, from the improving EBITDA, while net debt per equity remained below 1 time at 0.9 times according to our internal policy. And in terms of our credit rating, all credit rating are above investment grade. International rating Moody's, Baa3 and S&P BBB with a stable outlook. And for local rating, rate by Fitch Rating, it was A+ with a stable outlook. And this conclude the performance analysis. Next, I will hand over to Kun Nattapon to walk you through the market outlook.
Okay, the last part is the market outlook. Let me start with the crude oil market. This year, we expect oil market to remain quite balanced thanks to growing demand. So average demand this year will grow about 1.6 million barrels per day. And if we look at the supply from non-OPEC member, it will increase about 0.8 million barrels per day. And majority will again come from the US and also other key producing countries like Brazil, Guyana, and also Canada. But if we move to the next page, from this year, you can see that demand will grow about 1.4, non-OPEC 0.8. So we expect the call on OPEC production to increase about 0.6 million barrels per day. And because of the oversupply of the market at the moment, you can see that the balance below OPEC will need to continue their cuts. From recent announcement, they extend the cut to the end of the second quarter already. And going into the second half, we expect they can slightly unwind the production cut and increase production to the market slightly. But if we look at the balance on the top right chart, with the cut that we see at the moment, it kind of tightened the market supply. So we expect oil price to stay quite firm above $80 per barrel for this year. And next, let me move on to refining margins. So far this year, the Singapore cracking margin has still performed very well. So average quarter to date above $8 per barrel, thanks to demand recovery in transportation sector, especially jet fuel demand. And but for the second half of the year, we do expect there will be some capacity ramp up of new refinery, and that will balance out the market during that period. But at the moment, we expect the refining margins for the first half of the year to remain quite tight. And let me show you some figure. This year, demand will grow about 1.6 million barrels per day, and the majority of the growth will come from jet fuel from COVID recovery and also some gasoline demand. You can see that the number of flights will continue to improve above pre-COVID level, and we expect more recovery in the East, especially in China and also other developing countries in Southeast Asia. And in terms of the penetration of the electric vehicle, at the moment, last year, the sales of the EV in developed country kind of slowed down a little bit. So the total EV in the fleet is still quite small. It's about 3%. So we expect that they will impact the market maybe for the longer term after 2030. So you can see that this year demand for gasoline is still growing. And next, in terms of the new supply that come into the market, we do expect that there will be some large-scale refinery to be online, such as the one in Nigeria, in Kuwait, and also Mexico, totaling over 1.5 million barrels a day. But at the moment, they are still in the process of ramping up, and we expect they can probably reach the capacity sometime in the second half of the year. But after that, in 2025 onwards, you can see that there will be less projects coming online, and even after 25, there will be less. So we expect the utilization rate of the sector will hold quite firm, almost 85%. And at this level, when we have major turnaround or outages from refinery across the world, that will create a volatility and support refining margins on average. And next is the current market that I mentioned earlier. During the first quarter of this year, you can see that the global refinery runs will continue to run around last year level because of the major turnaround and also limited supply increase while demand is growing. So at the moment, the supply and demand balance of refined product is still quite tight and result in very low product inventory, especially the diesel inventory around the world, and that support crack spread for the middle distillate. And next, let me move on to the petchem market on the next slide. So we have aromatics market in Thailand. Main products are PX and benzene. We think that the bottom is over. It happened last year when the utilization rate reached a very low level below 70% because of the huge capacity built during 2019 to 2023. But this year onwards, you can see that the new capacity will come much smaller amount compared to the previous few years, and that will improve the sector's utilization a little bit going forward, and that will support the margin for both PX and benzene back to the mid-cycle sometime in the next 2 years. And next is the olefins. The main product is PE and PP. We think this year will continue to be another challenging year of olefins producer because of the huge capacity overhang, and also PP will have more capacity to come online this year, about over 6 million tons a year. And the sector could improve sometime in 2025 when we see less projects and utilization rate will start to improve from that. And the last sector is the base oil market. We are the base oil group 1 producer, and we can get some competition from the group 2 and group 3. So we typically look at the capacity growth from 3 group altogether. So this year you can see that capacity growth is about 1.3 million tons, and that will pressure the market a little bit. And also typically group 2, they use the gas oil as a feedstock, and group 1 use fuel oil. In the past 2 years, gas oil price has been quite high, much higher than fuel oil. So we see less competition from those players. But this year the market normalized a little bit. So we expect there could be some pressure from that side as well. So we expect the contribution from the base oil sector to be back to normal level, around 50 cents, 60 cents a barrel, lower from previous 2 years that it reached the record level due to the fact that I mentioned earlier. And I think that's it for the presentation from the company. Let me pass to the Q&A, please.
Okay, while we're waiting for the questions, so let me just give the final remark on our key focus area in this year, 2024. So Thai Oil will still continue to do the operational excellence, especially on the production optimization side, both the crude optimization and also product distribution around the region. We plan to resume our SPM operation within this year, and we'll ensure that no further damage with preventive measures. On the strategy side, we expect to be able to progress the CFP project as planned, and we expect to be able to commercialize the CFP project by next year. And on the financial side, we will continue on the cost management and explore the new innovative financial management to ensure adequate liquidity. And last but not least, on the sustainability, we will continue to drive toward net zero and to achieve our interim target of 15% greenhouse gas reduction by the year 2035, and will transform our portfolio to become more sustainable with our strategic direction. And just to touch on our target for the year 2030, we have a net profit aspiration to shape our portfolio. By the year 2030, we would like to have the net profit contribution 45% from the petroleum and high value products, reducing from currently around 70%, while 30% will come from petrochemicals, 20% will come from the new business and new S-curve, and 5% will come from the power industry. So this is an overview of Thai Oil key focus area in 2024 and our 2030 aspiration.
This session has come to an end. So on behalf of the Stock Exchange of Thailand, I would like to thank you investors and corporate for joining the conference. We look forward to welcome you all again in the next quarter. Thank you very much and have a good day. ขอบคุณนะคะ
Thank you ค่ะ
Thank you so much ค่ะ
Thank you